The UltraFICO score promises to instantly boost your credit score, but how does it work and who qualifies? I'm Bradford with the Penny Pinter's Guide to Personal Finance, and the subject of credit and how to raise your score is an often asked question in the field of personal finance. So whenever I hear somebody advertise that they can instantly boost your credit score, I get pretty skeptical because honestly, most of the time, it's just a scam to take your money and then you don't get anything actually in return. But since UltraFICO's parent company is FICO, the Fair Isaac Corporation that everybody's credit scores are made by, I had to dig a little bit deeper because there had to be some truth to this. The UltraFICO system promises to raise your score, but first let's look at two common misconceptions before we talk about how any of it actually works. First, UltraFICO is a completely separate credit score system from the traditional FICO score. So even if UltraFICO is able to raise your score using their proprietary algorithm, it's not going to have any impact on your FICO score over here. And then second, if UltraFICO is able to actually raise your score, it's not going to be taking you from a 400 up to an 850. It might, and I say might because it's not guaranteed that it's going to change your score at all, it might bump you up 10 or 20 points. And the whole purpose behind this is to take people that have no credit history, to be able to give them something to be able to get a loan, or somebody that has a lower credit score, be able to bump them up just enough to get above a lender's minimum credit threshold. Knowing that, let's take a look at how UltraFICO actually works. So UltraFICO is not something that you can actually proactively sign up for and be able to know instantly how it's going to actually impact your score compared to something like Experian Boost. So you're only ever actually going to be eligible to be able to use UltraFICO if you go to get a loan. Let's say it's an auto loan, you're applying for a mortgage and the lender denies you. And then the next step is if the lender either runs your credit check through Experian, or maybe you're just slightly below whatever their minimum cutoff is, they will give you the option to opt in to UltraFICO. Once you say, yes, I want to check that box, you go to UltraFICO and you're going to have to give them access to a bunch of your personal finance information, like your banking account statements, your credit card information. And then the UltraFICO algorithm is going to pull through all of that different information, and they're going to be able to take in some other financial pieces that are not traditionally used to calculate your credit score. And then by taking in that extra information, they can either, one, leave your score the same, at which point you're going to be in the same boat as you were before, you're denied for the credit application, or it might be able to increase your UltraFICO score, not your FICO score, just enough to be able to qualify for a loan. Albeit if you're in that situation, you're probably going to be getting a terrible interest rate, something that is significantly higher than if you had a good interest rate, or even better, you're able to just pay all cash in the first place, was taking the example of an auto loan. While a traditional FICO score only looks at 5 factors to determine what your score is: payment history, amounts owed, total length of credit, credit mix, and then amount of new credit applications, the UltraFICO score is going to look at 4 additional factors to help decide what your UltraFICO score is as compared to your FICO score: length of time your accounts have been opened, recency and frequency of your transactions, evidence of a consistent cash on hand, and history of positive account balances. At that point, once you've given all your information to UltraFICO, they're going to take it, they're going to calculate it using their algorithm, and then either your UltraFICO score is going to be higher than your FICO score, or there's not going to be any impact, as I mentioned earlier, and then you just still will not be approved for whatever loan you are applying for. So what are some of the positives of what this UltraFICO is doing to be able to incorporate some additional information that is not traditionally used to be able to calculate a credit score? So on the one hand, what's good about this is it can help some people that maybe you're just starting out and you don't have any credit history. Let's say you just turned 18, you're trying to go apply for a credit card or apply for a home loan, something like that, and you don't have any credit history built on, so most likely banks are not going to approve you for some sort of loan. So UltraFICO can look at some other things, as I previously mentioned, and then help generate some score for you, so that way you don't have to go through like a manual underwriting process, taking the example of a mortgage. And then the other example where it might benefit some people is, say you made some mistakes when you were younger, you defaulted on credit cards or something like that, maybe you had your car repoed. You've been able to turn your financial life around and now you're getting things back on your track, but you're trying to go apply for a home loan. But because of your previous credit history, all the lenders are looking at you and saying, I don't want to touch you with a 10-foot pole. So what UltraFICO can do is like, hey, yes, we know all this information on there from like 5-6 years ago looks really bad, but since then they've been able to be really solid with their finances, they're keeping consistent cash on hand, and they're being able to pay off their other bills regularly. And it might make just enough of a difference to be able to raise you above whatever the lender's minimum credit threshold is to be able to qualify for that loan. But I will say UltraFICO is not all positive, and there's some definite downsides that people need to be aware of before they decide to opt into it. And I'm going to reference over here Ramsey Solutions of the Dave Ramsey fame. While I do hate all debt, I think this is something that's particularly important for the UltraFICO score itself. So while Dave Ramsey and the Ramsey Solutions, they say don't do any sort of debt whatsoever with the exception of a 15-year fixed rate mortgage, I think their take right here is particularly important because they do focus on two things that I think people need to be aware of before they sign up. And the first one is that it does trap more people in debt because the only people that are going to be using UltraFICO in the first place are people that were denied a credit application. And usually that was for a good reason. Banks and other lenders are in the business to make money, and the more loans they can generate that they know are going to be paid back, the more they're going to give out because that means more money for them in their pockets. So if they are not able to loan you money, it's probably because they don't think, based on previous data, that you're actually going to be in a good spot to be able to repay it, which means you're probably not yet financially stable enough to be able to take on this new loan. And they back that up with point 2 here, because as I previously mentioned, one of the things that UltraFICO uses to be able to determine whether or not you are financially stable is determining that you have consistent cash on hand. Now they qualify that as only having an additional $400 in cash in your account month to month. $400 in cash, that might make you more financially secure than over half of Americans, but that does not mean from an objective standpoint, you are financially secure to be able to take on an auto loan, which is what a lot of this is going to be geared towards, or even taking out a mortgage. Because even if a mortgage is less than what your rent would be, there's a lot of hidden costs that come along with home ownership that people don't necessarily think about when they first go to buy a home. Overall, I think it is a generally good thing that we are moving away from the traditional way that credit scores were calculated and being able to take in some additional factors to be able to calculate whether or not somebody is a good fit to be able to repay a loan to a lender. So I do think there are some good upsides when it comes to UltraFICO and other things like Experian Boost, but just know that this is not going to have any big, significant long-term impact on what your credit score is. And that's why we put together this video right here to help you understand how credit scores work and what you can do to actually raise yours for free over time completely by yourself. Thanks for watching, and please remember, from your first penny to your first million, we're here to help.